And I begin to notice, okay, well, here's yesterday's ATR at 8 o'clock. There's the previous day's ATR, Wednesday's ATR 8 o'clock. And here, of course, is Tuesday's ATR. And so we said, okay, pretty much right on track, but we noticed that from one day to the next, we are at the lowest ATR we've had all week, right? Not by a long shot, but we are the lowest range at this time of the day we've had all week. So we're going, okay, that makes sense. Mark should be exhausted. It's a Friday morning. This can improve. Okay, another thing. Notice down bottom here. What do you see here? Is that the same low? That is the same low. But is this the same high? No, it's not. So what is that? It looks like a wedge, doesn't it? And what is a wedge? It's a market personality clue. So the second thing we saw this morning was we have a wedge on the ATR. That's right. You could actually look for patterns on indicators such as this. Now, that's about all I use this for. Okay, that's it. I don't care about what these numbers are on the side here. I'm sure some crazy mathematician could have come up with some exotic calculation for this. All right, we'll let the gurus over at Goldman Sachs do that stuff. We're day traders here. We're looking for simple clues, and this was a big heads up this morning. First thing, ATR was the lowest it had been. Second thing, a wedge on the ATR. And we know wedges, right? They're personality clues. So the first thing we talked about this morning was, guys, I hate to be the bearer of bad news, but we have some big red flags right now. And the second thing out of my mouth was, guys, if this doesn't get better, everything's going to be higher risk this morning. Now, a couple more clues here. Let's now look at a real chart. Okay, the ATR was one big clue. That got me a little bit concerned right away this morning. And then this right here, oh boy, right? Yikes. This is what really put the nail in the coffin. And this is when I said, guys, this is going to be a tough day today. What do we see here? Well, of course, we have this huge trading range yesterday in the dollar, right? This is my $13 range chart. Now, you know me, I love range charts. Why do I like range charts? There's a couple reasons. Helps me identify risk, easier to identify patterns, right? Pattern recognition on range charts, much easier. And in my opinion, they don't chop sideways, okay, as much as time charts or tick charts do. So it doesn't beg you to get into the market as much. All right, guys, come in on Monday morning, ask me more information about range charts, tell you more then. But what do we see here? I know, right? Narrow range. Let's recall, the dollar index, there's one big, huge red flag that I get from my dollar. When is it? We talked about ATR. It's not ATR. What was that one time the dollar says, do not get anywhere close to this market? A wedge. That's right. Whenever we have a price wedge on the dollar index, that tells me expect the worst out of every other market you see. We, of course, find our high to high, our low to low, and it gives me goosebumps just thinking about it, right? Because we know what happened next. Dollar went up, came back down. Dollar went down, came back up, and here we are chopping around sideways, narrow range, low ATR, a wedge on the dollar. I'm sorry, was it weekend? Is the weekend here yet? Right? Is the weekend started yet? Because that's what it looked like this morning at 7:45, 8 o'clock. First clue we saw in the dollar, on the Russell, was this bull channel. Now the bull channel, really easy to spot. We had that yesterday as well. And then one really easy structure here is the A, B equals C, D pattern. Now, remind me, guys, how does the A, B equals C, D work? Well, the way it works is I'm going to go from A to B. That's going to give me what I call a trigger zone, right, or a reversal zone. And of course, right in that reversal zone is where I get my C point. If I'm in the reversal zone from A to B, then of course I copy the A to B and I bring it and put it right here. So the distance, right, the distance here, let me mark this off here, the distance from A to B will be equal to C to D. Okay? Now, as you can see here, earlier on this week, if you recall, we ended up buying the C took that monster winner all of the D. Well, now here we are in our reversal zone at the highs. And this couldn't have worked out more perfect. Would have killed for some better price action this morning, but this is a perfect structure. Excuse me. So what do I say? What do I need here? I've got my D up top. Now the AB equals CD pattern, it gives me two opportunities. The D is a target we bought earlier this week and brought it up to the D. Made some great money in the Russell this week already, but now we find ourselves at the D. And this is called a reversal zone. My reversal zone tells me we now should be tumbling back out of that D, going all the way back down into our trigger zone, which members you know all about. And our trigger zone now is our target for a short position. So AB equals CD gave us a great buying opportunity early this week. This morning we come in, we found out we're at the D right now, which tells me now I'm looking to go short. So my plan was, if we broke through the highs, I've got to find some more clues up there, right? Because it's going to be higher risk above those highs, keep buying. I want to be selling. We knew the dollar wasn't going to give us much help, but we also knew that dollar, well, since it had a big drop this week, was likely now to retrace off those lows. So we anticipated possibly get a rising dollar. That may, of course, give that Russell a push off those highs. So I'm trying to go short the Russell. In the back of my mind here, I know I'm going to be in trouble if I'm aggressive today. So I've got to be conservative, got to be patient. Looking to sell the Russell. We find ourselves coming off the highs, double bottom, we go back up, and of course this becomes a relatively easy trade. I'm going to sell the highs here once, it'll come right back up. I'm going to try to sell it again at this resistance right above the highs. Remember everybody, how do we trade breakouts out of a wedge? A channel, a sideways range, find that resistance above it and look for that to be the place for the best short. So that's why I took trade here number one at the highs. Trade number two goes through the highs, right? We of course sell it again. Got 19 ticks out of the first trade, only a couple ticks out of the second trade. And of course, remember at that time, we're following our plan. Sell those highs. Now, when that thing failed, watch what happens. When this fails here, again, short number one off the highs. We go up, short number two, right, comes down 6-7 ticks, one target goes up -7 ticks for a -7 +7 -7, okay? And of course, it sits here for a while.